How's it going, everyone? Welcome. Welcome, guys. Good afternoon. Let's go, guys. Let's go with the FOMC. Let's go, everyone. The market has been retracing on the 15-minute representation significantly. So this is what happened. We have retraced back to the 200 EMA. Let's go, guys. Good afternoon. Let's go, everyone. Exciting times out here. Exciting moments. So let me just see what's happening in the markets. Welcome, everyone. Welcome, guys. We're 1,221. That's exactly how we have finished. Not trading anything at all off stream. But I'd like to trade this account. I'd like to make some extra money on the other accounts as well, the ones that are copy traded. I'd like to make a little more. I'd like to get to the max profit for the day, 1,500. I'd like to see a great runner. And there's great ways of trading the FOMC, guys. Great ways. We're back on the air. Exactly, John. We're back for the FOMC. We're back for the speech. We're back to make some more money. We are just as we finished with the accounts, and the finishing was not the end of the day. That 550 deserves another 1,000 on top of it. And there you go. We got to do that somehow with the FOMC. Not going to be an easy job. I'd like to see how does this 200 EMA is holding. A bunch of people lost trades during this retracement. Has been a significant one out here. An hour and 40 minutes continuous movement. We broke out of everything, squeezed to the top, and then nothing, none of the engulfings held at all, which is why in such cases you discover how important it is to trade, guys, with stop losses. If you're not willing to risk the entire account, because that's exactly what you're doing when you're not trading with a stop loss. You're actually risking the entire account. Yep. Exactly. I mean, we decreased 120 points. Which is something, but it's still none of those 400 or 500 points crashes. We don't get such discounts. It doesn't seem like that, right? For scalping, we're fine, basically. We do have opportunities here, so we're fine. Let's take those numbers up, guys. Make sure to like the video. Like the video and enjoy. Of course, this is going to be a very interesting time. We're also going to have the speech. We are ready for that on the press conference, which is going to happen in less than an hour. It is expected basically a pause on the rates, right? It's expected to be paused right now. No big deal. It is 99% prediction on the pause. So I don't think we're going to have a surprise. Let's find out more on how does the market of Nvidia react. Look at this, guys. Nvidia broke out and respects the support. It actually broke out on a tremendous trending line. And it's actually retesting. It has retested a trending line and now it's pumping. So Nvidia is bullish, guys. Nvidia is bullish out here, which is amazing for 5 minutes. Nasdaq as well, not in a situation to trigger not even a scalping short here. That's why I have to wait. I have to wait for some good setups. Gotta wait for the perfect moment, guys. Make sure to like the video so we take the numbers up to the moon. And get started with the great feeling of the FOMC market trading. That high level speculation that we can do with micros. Be careful, basically. Numbers can really have a very strong adjustment. Right, so things are not barely moving right now in this 1 minute candles. Barely moving, guys. And it has been like that for the past 2 hours. Barely moving markets. We got about 20 minutes to go. That's how much we got. $20 minutes to go. Hard to say what to expect from a type of rate decision which is having a 99% probability rate. It's going to be a very interesting time for the markets to deliver a radical type of movement, right? Very interesting time. We're also going to stream Powell's speech. Gold has been ranging. We have not performed anything interesting. S&P 500 came back to the 200 EMA, confirming support and reacting, bouncing strongly. Right, so double bottom structured throughout the day and a higher low. This is what we got, which clearly showcases a resistance line of the trend right there. So movement into that level is not only expectable, but a very realistic movement as long as you got bullishness around. Depends how does the market considerates the current situation. Let's go, guys. Let's go with the trading. You got to be careful. Very small numbers. Deal with micros. Do not extend into minis. Minis can easily wipe you out under any conditions. And when you deal with prop firms, too much money is not needed to be earned in a single day because it messes up your consistency. We already know that. That's how prop firms are functioning. They require you to be very strict on the consistency. So you're most likely not in a good shape to allow your winners to run, which is obviously not the way it goes around when you are trading on your personal accounts. You have to let your winners run as much as possible towards a realistic pivot point, supply, resistance, and so on, or many other ways to discover a rejection. You have to let your trade run into that level, and the more you make, the better it is. Well, when you talk about props. It's not the same thing. It's definitely not the same thing. You have to cut your winners at a specific dollar value because that dollar value keeps you eligible for payouts. Let's go, guys. Interesting time out here. 17 minutes to go for something which is very likely expected by the majority to be a neutral case, a pause case of the decision. So not a big deal right there. I would love to trade during the speech. I'd love to trade after the decision. There is about 30 minutes before the speech starts. So during that 30 minutes, and then once the speech starts, we're also going to be here. Probably, surely we're going to be here actually. At least at the beginning of the speech. Volatility has to jump through the roof. We need volatility, guys, to make money. Come on, BTC is starting to move, finally moving to the downside, giving opportunities, and then it spikes to the top, right? Very interesting times. The situation we're having today is not just about today's price action movement, but also what is about to be expected for the upcoming weeks. So it's not just about the movement we're having today, guys. Definitely not. The short-term movement we're having today, this is not what we care about. We care about what is going to happen for the upcoming weeks. That's where the big deal sits. Welcome everyone. Welcome guys. Make sure to like the video, subscribe to the channel, turn on the notifications. Sometimes we do 2 live streams in a day when we have such economic data. Press conference, this is what we care about. It's webcasted on Fed's YouTube channel in real time. Scheduled 8 times per year. Next release is going to be on May 7th, 2025. So there is a long way to go. There is nothing on April out of Fed. That's like a month and almost 2 weeks. Wouldn't be bad to get some bullishness going on during this period, throughout the entire period. Hey, from Brazil. Hey, Alexandra. Great job, guys. Great job. We got Americans. We got from South America. We got from Europe. We got from Asia. We got from all over the place usually on our usual live stream during the US opening. Today we're also going to have tons of people from all over the place. I'm definitely sure about it. It's going to be an exciting time, especially with the markets doing what it does.
Order filled.
Let's go for a little scalp out here and see if the low we got holds. 10 points, 15 points, guys. I don't need more. I'm actually out here. I'm actually out because I did not want it to trade on that account. That's something that I'm not fully focused, selecting the right account. Could be a terrible mistake, but I'm glad. We're fine. Obviously, we are fine. That's a great feedback. That's a great feedback. Appreciate it. We are building our prop firm review and educational website, very similar to what we did with Ticktick, guys. A lot of educational materials explaining things that might be complicated for users that are not from this business, for users that would like to have a clear understanding. We're going to explain the things from dozens of companies. We're going to cover at least 20 companies on this website and on my YouTube channel. And we're going to bring together our community in order to generate a power of being an authority in the market, right? So we would like to be completely and fully transparent and honest about this representations of the prop firms that we're doing. Do you think the volatility will be great? Well, it will definitely be great as volatility because this is how the markets behave during the FOMC. We already see the volatility increasing. So we're already get the taste, right? Volatility, you know, could nicely dip here into the 700s and then pump back into the 900s. Could nicely do that. It's going to be a huge volatility, but not only on the rate announcement, which is very likely to come out as expected. The volatility is going to continue and it's going to be wild during the speech. Probably you're going to have a stronger volatility during the speech. I wouldn't be surprised to see that. Today the markets, and at this round of FOMC, this is what the markets are waiting, guys, for the speech more than the rate. Right? So right now the speech sits in a superior level than the rate. That is the time big numbers are going to be printed. With every single word, with every single sentence, with every single detail, with every single dot Powell is putting out, you're going to see the markets reacting to that. Short-term reaction, medium-term as well. Beautiful reaction here. 10 minutes to go, guys. Actually, less than 10 minutes to go. We're going to ring the bell at the time, just like we do it when the market is opening. That's how we're going to do it. Looking forward getting the numbers on the website. Probably 4.5%. It's going to remain like that, so that means it's going to be paused. Very unlikely for things to change. That's a good 5-minute reaction, guys. Keep in mind, this specific low, this specific low, this specific high, 200 EMA, could be a catalyst. You could explode from here. You could dump it as low as 700s. You can dump it as low as 650s. And then if it explodes here, it goes above 20,000s. But this whole thing is going to stick with the press conference. That's a beautiful move on the 5-minute. There's 8 minutes to go, everyone. 8 minutes to go. This is the first time we're live streaming the FOMC and the speech. However, we just started live streaming for 3 weeks. When we are going to have a year or 2 years of live streaming here with you fellas, focusing on trading and performing in the markets, that's going to be a really exciting time. I'm sure about it. We're going to be out here. In a year, we're going to be here 1,000 fellas. 1,000 fellas. Once again, guys, I'm trading on Ticktick Trader. Let me share with you my link and attach that basically as pin post. Pin the message. Instant funding prop firm. You don't need to go through challenges. You get funded instantly. You make money from the beginning with 35% discount which is the maximum available at the moment by using my coupon code at the checkout. These are the possibilities starting with 50k up to 250k account, which is not discounted, but the best one as a ratio is the 150k prime. Great to go with the payout threshold at 5%, max loss at 5% as well, and great numbers on board. This could be a nice opportunity here to long the markets, but 6 minutes before the rate comes out is never a good idea. Like, the opening wouldn't be a problem, it would be actually different with the opening, but this way, this is not the US opening, guys. This is something wild. This is something wild, especially when the rate decision in terms of analytics and prediction is not as clear as today, especially during those times when you have a probability of 45% for pause and a 55% for rate cuts. That is the wild times we're gonna have, guys. We're gonna have in the next meetings, and you'll see 300, 400 points movements in matter of 2 1-minute candles, guys. That's gonna be the big deal. Yeah, the markets were nicely and artificially been brought back to the 200 EMA. So we're looking forward to that. Few minutes to go, guys, and we are going to discover. We are going to discover less than 5 minutes to go, guys. Let's go, everyone. Really exciting times out here. This would be a lovely situation to long. A lovely situation to long. Four minutes to go, guys. We got our calendar. Let me put this in a such way so all of you have a visible representation with a timer. The timer is right here. Less than 4 minutes to go. Forecast, previews, and the actual. Tomorrow, Thursday, we got the unemployment claims, which will have the ability to move the markets at a certain range. Yep, this specific week is totally dominated, of course, by the FOMC. What a beautiful chart here, guys. The only thing is that it does not matter how the price action looks prior to the FOMC and prior to the speech, right? So think about during the rate announcement, you can have a pump. During the speech, you can dump it, or you can do it vice versa. You got to be prepared to trade under best conditions with the best forms available. Less than 3 minutes to go, guys. $6.46. About 2 minutes to go. About 2 minutes to go. We also care about looking at the markets. Might be a bit of delay till you hear this, as YouTube is having a form of delay, but we're going to look at the markets and speak about it. Lovely positions here the market is holding right now, but still can nicely nosedive. Can nicely nosedive or simply just pump. That makes sense, guys. That makes sense. No trading right now. We will care more about on the speech. 1 minute to go, guys. 1 minute to go. Sitting around 820s, holding onto this level. The 4 hours is looking ugly, but it does not matter. It's 4 hours that comes before the rate and the speech. 30 seconds to go, guys. "30 seconds to go." There is a bit of delay with the latency you guys have, but that is totally fine. About 10 seconds to go. And we put the opening bell, guys. We put on the opening bell. We're looking forward to it. 4.5. Nothing has changed. As expected, basically. And the market had a positive reaction so far. Nothing has changed at 4.5, guys.
Order filled.
They paused. They definitely paused. And I'm taking a single micro here for a nice continuation. And I am out.
Order filled.
They just paused, guys. Taking the longs all the way. Exactly. Look at the beautiful reaction here. We got a pump of 120 points so far. So that is massive, right? Nvidia is pumping as well. S&P 500 is pumping too, pretty much as expected, which is something that the markets are definitely enjoying. Bitcoin is moving as well to the top side. Everything is having the strength that we actually need. Now, the big deal is going to be with the Powell speech. This was expected to be like that in terms of getting a pause on the rate cuts. The big deal is going to be starting in 30 minutes from now, everyone. That's what you got to gather for. And that's why you are here, fellas. Make sure to like the video. Subscribe as well to our channel. We are looking forward here, taking advantage of the volatility in the upcoming, probably an hour and a half. It's going to be tons of volatility with every single word Powell is putting out. It represents the future possibilities of inclining towards rate cuts during the next release, which is on May 7th. You made $14,000 in a second. Good job. I mean, if you made that with consistency, that's depends on the account size. Depends how. If you made that on a personal account, that's great. But if you're trading under prop firms with consistency, might not be the best idea to make that money, right? We are discovering during the speech what does the FOMC looks towards the weakness or the inflation side of the market, and we also care how does the markets will consider that. in terms of where is the danger. Is it on the inflation? Is it on the weakness? What do we have to do? And when do we have to cut those rates? I mean, it's expected basically for 2025 to be 2 different sessions of cuts. Depends with how much is the basis points question. 25 basis points, 75 basis points. There's a lot of varieties right now. Personal account. That's a good job, buddy. That's a very good job. That's the way to go. $14,000 on a personal account. During the... You were going pretty aggressively. Take it easy right now. You know, the speech is not going to be easy to trade because obviously there's going to be ups and downs during the speech. It's hard to have a single direction during the speech. It's hard to have. The markets are usually positioning themselves real time with the speech, and usually volatility is what kills a lot of the people during this stage. Let me just short the markets here a little bit, guys. We're doing a single micro. We just got to be here in a good trade. Shorting this back to the body of the candle. We're shorting another micro, 2 micros. I'm out. I don't like it. I don't like sitting in that short. I don't like it. As expected, guys, we are... And we got to pause 4.5%. Let me just... So we got to pause at 4.5. No big deal with that. Exactly. %. Thank you, buddy. Exactly. It happened on a personal account. He said that. So it's obviously a necessity right now at all costs not to trade anymore, especially when you're under a very emotional feeling. You would not risk 14 grand profit for any extra dollar. It is not worth it. Not even 1,000 extra. If you're having right now a loss, if you're about to trade and you have a loss, you're going to go in a spiral of emotional fact that you can lose all that 14 grand, buddy. So be careful. That's the thing with highly emotional situations, and I've been speaking during my videos, even big winners, great situations can easily affect you because the state of your emotion is under intense moments. It's not just about the sadness, frustration, or revenge type of trading that affects you guys. It's also when you are too pumped up and highly energized. It also affects you during the same scale. It's the same problem. You gotta be neutral, emotionless when you trade. Otherwise, you can actually face the consequences of a non-rational decision, which is not backed up by the data of the markets. Not much going around as of now. I mean, there is room here to speculate, of course, but we got to be careful and we got to be cautious. Another good strategy is when you have a massive day on your personal and even funded accounts. You can have a special account at a prop firm, but you pay just a few dollars, like a challenge type of account. If you cannot stop yourself, but there's ways to stop yourself, guys, by locking yourself out, leaving the office and things like that. There's always ways. There's also the situation where you just trade something that's a challenge and you kind of revenge into that, consume the energy, and that's it, right? It's also possible to do that, guys. Make sure to like the video, subscribe to the channel. We're streaming from Monday to Friday, everyone. Before the US market opens, we have our live stream show. Hope you enjoy today. What's happening here? Quite slow as of now. Markets are waiting for the Powell speech. Yes, it does. Look at that 5-minute wick. Massive rejection on board. BTC. BTC pumped $1,000. It denied it. As usually. The crypto market is intense. I wasn't aware of the fast track trading case. Was not aware during the latest weeks at all. Not sure officially what's happening there. It's good to hear if the judges regarded it like that. Probably it has been scheduled and scripted to be like that, right? So probably there are proofs that this is how it has been scripted from the beginning. Because you can fail as a business in an honest way, or you can pretty much script your failing to scam your clients and customers. It depends. Failing in an honest way is not the same as failing in a scripted way. And that is separated by the intentions you have. So if the judges discovered their intentions were clearly into scamming people, means it was not a legit business. And they need to be held accountable for that. Surely does, right? They might fight to protect themselves and proving that it has been a failure, like a natural, organic failure of a business, which is obviously depending on the decisions you do, which are backed up by the intentions you have. But these cases are usually difficult for the judges to discover the intentions. Nasdaq is about to slowly grind and break out. Once the speech starts, would love to see that breakout above today's high we had. Wouldn't be a big deal at all in terms of the numbers here. It's just a couple of points, guys. We gotta move to the 15 minute. This is the way it looks. And this is just great. Exactly. That is certainly a major issue when you go around like that. So there are certain proofs. You know, he was trying certain things to hide it, but it seems like not working. It's not working that easily to scam the justice system. No. It's pretty much a big loss as well for the prop firm world. I'm telling you what happens with people. They lose their confidence in trading. They lose their energy. They lose their strength. Their internal strength is affected with such events. So such scams are usually shaking the markets because it was with thousands of clients, right? So it was not a prop firm with 2 clients. Yep. Good move so far, guys. Good move on 15 minute. 1 hour as well. Let me share with you something on 1 hour. We got a specific top here. And this is basically the trending line that we got to play on the 1 hour. We can move this to the 30 minutes. This is what we got to play here, guys. We break out of this, we're just going nuts. We break out of this, we're going nuts. We're very likely to break out of this and unlikely not to do it, of course. Reversing like this based on Powell's speech and just, you know, taking some liquidity from the levels that are below our demand zone as a structure is unlikely. Is definitely unlikely. Doing this movement not only is not expected by the charts, but again, the markets are having a great possibility with a strength we had to push the price action about, 100 points here to continue and form that breakout, which is going to attract more and more people into the markets. Right, so 1 hour Nasdaq looks very good. Very good. Nvidia broke out. Nvidia broke out and goes for a market continuation, goes for filling up the gap into 119.5, and that it wants to touch a variety of tops. Slowly grinding. 15 minutes to go till the speech, guys. That's a very important element. And during the speech, we're going to discover a lot of the things. Look at the monthly. Look at the monthly opening on 21,000 right there at the top. All the way to the monthly. 21,000. Let me ask you guys something. Let me ask you guys in the chat. So let's engage. I'm trading crypto a lot in terms of swing trading, but I'm not trading crypto at all on day trading. So it's just a lot of swing trading where I don't need to perform daily. And that's why we're doing basically a bunch of day trading for the Nasdaq. So this is, let me tell you a question here, guys. Look at the monthly closing, actually the monthly opening is on 21,000. Do we touch 21,000? So do we get back to the monthly? Do we get back to the monthly opening for NQ on 21K during March? What do you guys think about? So during this month, of course. Do we get back to our opening during this month? You can vote, guys. You can vote and let your opinion right there. In a bullish context with the chat here, it is expected to see those levels. We need 1,000 points, and with today's movement depends how does it extends into the upcoming weeks, because we got the upcoming, actually we got 6 days of business days left. 6 days of markets left out of March. So during 6 days, do we print 1,100 points? That's the idea. It's just 6 days, guys. It's not that much. And then the yearly. Yearly is a little bit higher. 21,235, around that one. So the S&P for 30-minute candlesticks, this is what it does. We got this local top and we're dealing with resistance as of now. The next candle needs to make on the decision, right? Needs to complete a decision. Look at the BTC, guys. Looks ready to continue to the top side. Looks ready to continue for the upcoming days as well. Bitcoin has been in a terrible situation. I mean, much better than the altcoins, of course, but terrible situation compared to the gold. That's what I wanted to say earlier. Gold went to the all-time high. BTC been in a temporary distribution and then a retracement. So now it wants to hold on to this 80,000 with the altcoins moving better and the BTC dominance decreasing, guys. BTC dominance, have a look into that. It is about to fail. Right, once this BTC dominant support trending line is breaking, we're switching the trend into the altcoins, and we're looking for seeing the market cap of Bitcoin against the altcoins going down, and that means the altcoins will increase more in terms of a bullish environment, which is expected basically. So getting the BTC down, BTC dominance here, can easily be 200-300% on the altcoins, and even more than that. And that's a lot, because that could trigger an altcoin season, which will extend basically along with the rate cuts, into something very strong. Let's get to the 30 minutes, 10 minutes to go till the expected speech starts. That's the theory, guys. We need a good momentum, and then the market is going to follow up with a rate cut process. So we will have the ability to accelerate, but we should have a momentum before that. 10 minutes to go. It's going to be live streamed. I'm also going to be here. I like to go ahead and perform. Trade some more. But it's kind of difficult right now to discover a decent setup. Make sure, guys, to join our Discord. We got our Discord prop firms community. We're preparing our prop firm review website for complete and full transparency, to be an authority in the market. If you get called out to be a scam, it's gone. If you trick your clients, delay their payouts, and start doing such things, and you get to be called out by our community website as a scam, you should be out of the market. You should see a tremendous decrease in your sales. This is how it should be, guys. And this is what we're striving to build on. Right? So it's going to be a legit weapon of honesty. Tremendous value behind such project. We're working on it already, preparing, and having a great time. Look at that, guys. 7 minutes to go. Let me see, where do we get this press conference? Webcasted on their platform, on their YouTube channel. 15,000 people already ready to go here. This is the place it's gonna be, guys.
Order filled.
Let me try out a scalp here with a continuation. A scalp here with a market continuation down and a very tight stop loss here above the structure.
Order filled.
Eight micros short. Looking for the 60s. Looking for the 60s, guys. Or simply could be rejected, of course.
Order filled.
2 more contracts. We're out here with 10 contracts. $10 micros short. Time to reject it here, otherwise I am out. Are they capable to protect this in terms of the bears and take the markets down a little bit before the speech starts? They have to play with the liquidity. And there is some fair value gaps here, around 69, 60s. It's a good point. 2 more red candles, guys. We would touch that target. Let's go, guys. That looks like a beautiful... That looks like a beautiful candle. Look at this, guys. Look at this one. That's where you got the liquidity below this level. Fair value gap right there. 68, 69. You want to get into that one. I'm playing on a tight stop loss. $66 as a loss. It's definitely worth it with a $700 profit scenario. Hits 10 times more on the take profit than the stop loss. If it becomes ugly, I'm out.
Order filled.
I've been stopped out and I jumped into a long with a stop loss below this. Instantly reversed. We've been stopped out on break even with that one. But this is obviously before the speech starts.
Order filled.
Better taking it away, guys. Better taking it away. 21,000 fellas out here. Bullish scenario, of course, but I would love to get a bit of volatility also to the downside. The new 30-minute candle starts in 2 minutes, and I would love to monetize the movement to the downside here. The thing is, the market do not cares about the things that I want.
Order filled. Order filled.
We're gonna go tight stop loss there.
Order filled.
With a good opportunity, guys. Look at that. Let's go. Let's go. Break below the previous. Break below and continue. We got a good $800 target. Moving the stop loss to our entry. Let's break even. Let's go, guys. Exiting
Order filled.
partially. Exiting
filled.
partially once again. We've got 5 contracts left. And we're up $742. So we made about $300 in this trade, which is good stuff. Already putting together the fireworks for this one. Already putting together the fireworks for this one. 1 minute to go. I'm out.
Order filled.
$849. That's great. So we made about $400 total in this one. Yep. Exactly, but this is what the markets are seeking, basically, to hear certain words from Powell. They want to hear those words so they can trigger. So they can trigger. They can trigger the volume. We just exited at the right time. And we got the speech, guys. Let me know how does the volume. Let me try to exercise the volume here. How do you guys hear this?
More to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand.
Chat, let me know the volume.
In the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1%
Let's go with it long here
remains
with the breakout
low and is held in a narrow range for the past year.
Extra
The
245.
jobs to workers gap has held steady for several months. Wages are growing faster than
play
inflation
tight, basically.
and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures.
Beautiful.
The median
Order
projection
filled.
for the unemployment
Great,
rate in
guys.
the ACP is 4.4%.
We secured a
at the end
profit
of
with
this
that one.
year, and 4.3% over the next
Good
2
one.
years.
Good fireworks, Powell. Good job.
Inflation has eased significantly
$1,088.
over the past 2 years, but
There you
remains
go.
somewhat elevated relative to our 2%
There you
longer run
go.
goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures have recently moved up. We see this in both market and survey-based measures, And survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective.
S&P as
Our
well,
monetary policy
confirming the
actions are
breakout.
guided by our dual mandate to promote maximum employment and stable prices for the American people.
Gold, guys, is going to break out. It's
At
going to
today's
go all-time
meeting, the
high.
committee decided to maintain the target range for the federal funds
And
rate
the
at 4.25% to
DXY is gonna
4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly.
Order
Our
filled.
current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we
Order
have seen
filled.
some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to
Order
$5 billion.
filled.
Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices.
Exactly. One word is
We remain committed
needed.
to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that
Order
our actions
filled.
affect communities, families, and businesses across the country. Everything we do is in service to our public
Let's go,
mission.
guys, to the target.
We at the Fed will do
962. That's
everything
what I
we
care
can
about.
to achieve our maximum employment and price stability goals. Thank you.
This is a
I will look
13
forward to your
micros
questions.
position.
Howard Schneider with Reuters. Thanks for your time. So, two things on sort of the
Come
real
on,
side here.
squeeze it above.
Inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging.
We're rejecting so far on the breakout.
The answer is clearly some of it. A good part of it is coming
Trending
from
line is
tariffs.
rejecting so far, guys.
We'll be working, and so will other forecasters, to try to find the best possible way to
Order
separate
filled.
non-tariff inflation from tariff inflation. In terms of
Order filled.
your sort of looking through question, too soon to say about that. As I've mentioned, it can be
Order
the case
filled.
that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the
Let's
case
go.
in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly
Playing this
quickly.
tight.
And it would
This is a
depend
good
critically
position
as well
here that we
on
got.
inflation expectations being well anchored, longer term.
Come on, take
inflation
it down.
expectations
10
being
points.
Well anchored.
Well, I guess I'm looking at the out years here, and the
Order
fact that
filled.
the policy path
Wow.
doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there
And then
is
it
no
dumps. Look at that, guys.
signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things
Order filled.
actually work out.
Order
and the
filled.
fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby. Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored,
Order
but has your
filled.
confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and
Order
forecasters?
filled.
So on inflation expectations, of course, we do monitor inflation expectations.
Watching my
very, very
trades,
carefully.
exactly.
Basically, every source we can find, and
Exactly.
short-term,
Exactly
long-term,
what happens.
households, businesses, forecasters, market-based. And I think the picture
Order
broadly is
filled.
this: you do see increases
Order
widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the 5-year forward, you'll see that
Beautiful move, guys. Let's go.
break-evens are either flat or actually
Let's go
slightly
for the
down
top.
in the case of the longer-term one. So we look at that, and we will be
Look at this,
watching all of
guys.
it
Look at
very,
this
very
straight,
carefully.
everyone.
We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
You definitely want to continue
And
with
how
this
much weight do
candle,
you
with
put
this
on
red
the
candle, turn it in
deterioration
green.
in consumer confidence surveys?
You
said
definitely
recently
want to
that
take
is
this green,
perhaps
guys.
Not, the best
Come on.
indication of future spending.
Beautiful. Come on,
but
let's
I'm
go.
curious,
Let's
you
break
know,
a
what
ball.
you
Let's
think
hit
is
that
behind
2,200
this
target,
deterioration
and it's going to
to
give
what
us
extent it
1,500
could be a leading
basically,
indicator for hard data.
which is the max profit I need.
Let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit,
Come
but
on,
still
that's
at
a
solid
beautiful
pace.
purchase.
Unemployment's
Look at this, guys. Come on,
4.1%.
let's go.
Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture.
Whatever
The
word that
survey
takes the
data,
market down
both
needs to be
household
avoided
and
in the
businesses
next
show
couple of minutes.
significant
Whatever word.
rise in uncertainty and significant concerns about
Give me the
downside
words
risks.
that
So
are
how do we
pumping
think
the
about that?
markets
And
right
that's-
now.
that is
Give me the
question.
words.
As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times
Stop
where
asking him
people are
questions
saying
that are
very
dumping the markets.
downbeat things about the economy and then going out and buying a new
I don't
car.
want to.
But we don't know that
I don't
will
wanna
be the
sell
case
anything
We
here,
will be
guys.
watching very carefully.
Stop asking
for
him
signs of
questions.
weakness in the real data. Of course we will. But given where we are, we think our policy's in a good place to react to what comes, and we think that the right thing to do
Let's
is
go,
to
guys.
wait
Let's
here
go,
for
guys.
for greater clarity about
Do the right
about
things.
what the economy's doing.
Ask him the questions for bullishness. Come on. Do the right
Tim
thing
Rose,
for
the Wall
me.
Street Journal. Chair Powell, Chair Greenspan once defined price stability as
Look
an
at a
environment in which
beautiful move.
inflation is so low and stable over time
Let's
that it
go.
doesn't materially enter
Let's go, guys.
Into the decisions
Selling
of
out
Order
5
filled.
contracts
firms.
here.
Can you say that today?
Order
We have
filled.
And another 5, basically.
Households and businesses are ignoring price growth. When you see buy in advance psychology, big changes in inventories, and surveys that show
Let's just take it a little bit
consumers, at least
higher.
in the short run, expect higher inflation.
So I do like that definition.
Slightly
a lot. In
above
fact, I used it,
20,000s. Look at that,
the
guys.
recent,
Look at
conference
that,
where I
guys. We
spoke. So
secured
I think
557.
a
We were
world
down
where people
earlier.
can make their daily
And
economic
I need the
decisions in
fireworks for
businesses
what
and
we
they're not
secured so
having
far,
to think about the
because this
possibility
is
of
what
significantly high
he's gonna
inflation.
have
We know
Powell
inflation will bounce
enjoying.
around. That is price stability.
He's going to enjoy the
I think we
fireworks
were
he's seeing
getting
on my
closer
screen.
and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time.
Let's go,
I do
guys.
think with the
77. You don't want to
arrival
stop
of-
there. It's-
Of the tariff inflation.
should be a lucky number, right, with the 7s.
Further progress may be delayed.
Shouldn't be the
S&P
one
doesn't really
throwing
show
things out.
further downward progress on inflation this year, and that's really due to the tariffs coming in. So
Let's go, chat.
Delayed, but if you look at our forecasts,
You
we do
definitely
see
need to
ourselves
ask
getting
him
back,
some questions, chat. That's
into
going to
the
take
low
the
twos,
market to the
in 26 and
20,000s.
then
Look
down
at
to
that.
2 by 27. Of course, highly uncertain. So I see progress.
Stop talking about uncertainty.
Toward that, and then progress in the future. I think that progress is probably delayed for the time being.
Stop talking about
If
uncertainty.
that's the
It's
case, why
time
are there
to
cuts in the S&P
take
for
you to a certainty of
2025?
20,000s.
So again, people wrote down 2 cuts the last time, and they look at the the.
Speaking about
they
cuts.
wrote down meaningful decline in growth from 2.1 to 1.7 in 2025. A tick up in the unemployment rate, so not much there, but core inflation up by 0.3, and so those kind of balance each other out. So not everybody.
that, guys.
but
What
on
an entry.
balance, people wrote down similar
What an
numbers.
entry.
The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this
He
is
has
going
to
to
stop
work
with the
out.
uncertainty.
And
This is not helping
we
the
think
markets.
Our policy's in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of
Inappropriate.
course, the costs of doing that, given that the economy is still solid, are very low.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment, pretty
Let's go
close
for
to its
NVIDIA,
natural
which is
level.
doing its nice job. Bitcoin
but
is obviously
job-
sleeping at this time.
The hiring rate is quite low.
Gold.
So is the layoff
Gold
rate.
went
So
all-time high
you
during the
look at initial
speech,
claims
guys.
or
Oh my
layoffs.
God.
So you're not seeing
at
people
this.
losing
It's
their
opening
jobs,
the doors.
but you're seeing that people who don't have a
Opening
job
the
having to wait
doors.
longer and longer. And the question is, which way
S&P
does
is
that break?
just
If we were to see
pumping.
a meaningful increase in layoffs, then that would probably translate
Everything
fairly
is
quickly
printing, guys.
into
Everything is
unemployment
printing.
because people are,
This
it's
is
not
becoming
it's not a big
unstoppable.
hiring market. We've been watching that.
Right,
and
we
it's
should
just not in
transform the
data. It
previous
hasn't
high
happened.
here
What
into
we've
support
had
like we're
is
doing
a
right now in the
low firing, low
950s and then send this one
situation,
quickly
and it
above
seems to be
20,000s.
imbalanced
I
now
mean,
for,
look
for
at
the
that,
last
guys.
6,
100
7, 8
points.
months. that's where we are. There's healthy levels of job creation, too.
Where
So
our entry
overall, it's a labor
is
market
a
that's
good
in
mark,
balance,
100
and, you know,
points.
We watch it very carefully.
Only
So then, have we seen
50%
the
consider
administration,
we're
the new
going back
administration's
to the
policies
opening
in the economic numbers
for
yet? And when do you anticipate that happening?
Nasdaq
In labor or
off
in
21K
In labor and inflation,
during
just
March.
across the economy, have we
So
started to see
1,000
the new
points from
policies
here,
take
guys,
effect
during
in the
March,
numbers?
during 6 business days.
You know, only in a kind of an early way. I mean, it's only been a few months, right? You know, for example, the layoffs that are happening here are.
Let's
you know,
go
they're
with the
certainly
scandal.
meaningful to the people involved, and they may be meaningful
This is the
to a
one you want to
particular
close above
neighborhood or
80s,
region or area.
and then the next
But
one
at the
brings
national
above
level,
20,000.
They're not significant yet, but we don't know. We don't know where that.
I'm
how
also
far
gonna
that
have
will
a
go. We'll
nice
find out much more.
Order
2
filled.
contracts
Mentioned that
long
you-
here.
You saw we've had two very strong goods inflation readings in the last 2 months.
Order
which is
filled.
Very
3
unexpected.
contracts actually,
I
and the
think
other copy traded
hard
accounts
to trace
too.
it to specific tariffs, but it must have something to do with. It's either noise, and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with
97.
people buying ahead of tariffs or raising
Exit
prices
over
ahead
there
of
on
tariffs and things like
97.
that those kinds of things
And
happen.
right
They're
here
very,
is
very
a
hard
little
to
bit
capture,
different.
because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed.
Dryers,
so the
washing
manufacturers
machines.
just, they just kind of followed the crowd and raised it. So things happen very indirectly. And so there'll be a lot of work done in coming months to
What
to
a
try
trade.
to trace
Thank
all
you,
that
buddy.
through. But ultimately,
Let's
though,
go,
it's too
guys.
soon to
Let's
be
go.
seeing significant effects in economic data.
Craig Torres from Bloomberg News.
The markets are waiting
Thanks,
for
Chair
certain
Powell.
words.
You said transitory
Waiting.
price
Let's just wait for the
increases
words.
from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last?
Pandemic, yes, during the
Because you
pandemic.
could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that. And, it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished yet, and we have to keep that in mind. And we hear that people are very reluctant to take on to allow prices to go up. At the same
Break
time, we
below
hear that
this and
businesses
cut
are
it on
intending
this
to pass
account.
many of these prices through. So it's hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
Order filled.
So we
2
have
extra
2
contracts
goals, right?
added.
We have maximum employment and price stability, and we have to balance those. And there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says
So
what
we can
should do in that
decrease the
case. That's a
target.
very
We only
challenging, situation for
around
any central bank, and
1,500
certainly for
totally.
us. And so what we say that we'll do is we'll
991,
look
the
how
new
far each of
target.
those 2
So we
goals is
successfully
from-
decreased
each of
10
those 2
points by
measures
adding
is
2
from
extra
its goal.
contracts.
And then we'll ask
To
how
a,
long we
good
think
scenario here,
it might
guys.
take to get back to the
Good
goal
scenario
for each of them, and
here.
we'll make a judgment, because
Good
our
scenario
tools
on the other
work in
account,
one
too.
direction. We're either tightening or loosening. So it's a very challenging situation.
Let's go with
Let me
this
say,
one. I'd like to
we
make
don't
my
have that situation
beautiful.
right now.
Come on.
That's not where the economy is at all. It's also not where the
Let's go.
forecast is. I don't know any mainstream forecasts that really show
Order
significant
filled.
problems
Great.
like that.
It has been filled. 1,525
Just to
guys has
follow
been
up,
secured for
yesterday,
today.
The UCLA Anderson forecast said there high probability
That's
of a
the
recession.
way to go
Where do you
about this
stand on
fireworks.
Whether or not the slowdown you're seeing creates a
We
higher
made
probability or
the
concern
max
that you may
needed.
have on recession?
Also,
Thank you.
here, what's
There's
happening,
always
guys?
an unconditional possibility
We're gonna move
of
the-
a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, it could be
We're gonna
within
move
12
the
months, a
stop
1 in 4
loss
chance of a
to
recession.
the profit
So the
and
question
just
is
let this
whether
thing
that,
go into
whether this current situation,
a target that will give us
those
basically
possibilities are elevated.
1,500 here as well.
We don't make such a forecast.
Let's
If you
just
look
go
at
with this
outside
one.
Forecasters have generally raised, a number of them have raised
Hang in
their
there. Let's go, guys.
possibility of
Come
a
on, push this
recession
above. You're going to squeeze above
somewhat,
20,000.
but
You're not
still
going to
at
reject
relatively
here.
moderate levels, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Let's go, guys. There's not much rejection coming in from hitting 20,000s.
Hi, thank you, Chris Ruge.
It's not going to scare me.
As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I have no desire to change that answer and have nothing new for you on that today.
Well, maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing
That's a
that?
good number,
what we
guys.
saw last week from the University of Michigan, or does that carry the same weight as it did
Max
in the past?
profit here,
So
and close to max profit on the other accounts.
I place a huge weight on it. I think
If we break even here on this trade, it's still good, guys. It's still 1,237.
That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing.
Let's go.
We look at it, we don't dismiss data that we don't like. We force ourselves to look
Give
at
me
it
another
as an
contract here.
outlier compared to
Sitting on 4 right
market-based
now.
and compared to other survey-based assessments
So I can decrease my
longer
target a little.
run inflation expectations. So we got to keep that in mind. And I would just say we look at
This
all
is
of
where
them,
we are,
and,
guys.
that one's kind of an outlier, but
We've been
nonetheless,
building
we
a
take
staircase
notice
here.
of it.
Look at that. Previous highs retested continuously.
Michael McKee from Bloomberg Radio and Television. There is a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy,
This
that
is
you
the candle
would end
that
up
has to
waiting too
deliver. This
long
one.
and be
This
behind the
is the
curve in
one.
responding to any downturn. How
Let's
can
just
you
do 50
reassure
points
people
movement
that
here.
You can spot
Do
a
it. Come
problem
on.
early enough, unless you decide to
Order
be
filled.
preemptive.
Beautiful, guys. Beautiful.
Yeah,
Secured that one as
we're
well.
aware of
So
it.
made
We're
total
well
profits
aware of how
everywhere.
Things are going to evolve in the time frame.
Finished with all the 3 accounts for
we will use our
today.
tools to foster achievement of our goals to the best we can.
Let's find out more on the
And
second
of
one.
course, we're gonna try to be timely with
$1,551.
that. For right
Third
now,
one as well.
our data are
$1,525.
pretty
Everything
solid.
is
we are
heavily
obviously aware
on
of the
green.
soft
Let me see
sentiment
the
data and
performance
high
stats.
uncertainty. And we're watching that
Let's
carefully.
discover more
and
about
we think
it.
it's a good time for
So
us
this is
to
where we
wait
have,
for
guys.
further
This is
clarity before we
this is how
consider
you need
adjusting
to
our
start.
policy stance.
Do
I'll
you
speak
think
about
it's going to
myself.
be
Of course, this
hard
is how you
to
want to
get
start your
clarity
trading with
in
a
the
fresh
government by
account.
tweet? I mean, do you have
With a such strong
feeling that
loss,
at some
because if
point
you start like
actually
that,
will have
then you
a
get
forecast you can
motivated
trust?
to fight
Yes, I
back.
think we will.
If you
it's
start
hard to say
making
when it will
money,
be.
it's not like that anymore. Right? So
these decisions
you
are
better
gonna be
start with a
made,
loss,
and they're gonna be
and then you
implemented,
get
and
a
we'll
such
know.
strength
At that
to
point, we'll
fight
know what
back.
the decisions are. and
Never
we'll have to
seen
make
before.
assessments then
Look
about
at
the implications for the economy.
I'm just joking
Those
around,
things will
fellas. We have
happen.
a
lot
good
of them
day
will
out
happen over the
here.
course of,
Powell
the
is
coming months,
speaking out the
certainly over
right
the course of
words.
this year, and we'll be
Powell is
adapting as we
delivering
go.
the right words. So they should stop. We're pumping. They should start with the questions and let the
Rachel Siegel
markets
from the
continue
Washington
like that.
Post.
It's
Thank you
very
for
much
taking our
sufficient,
questions.
guys.
At the beginning, you were talking about separating
What's happening?
the signal
BTC
from
has
the noise
pumped.
and tariff inflation from
Wow.
non-tariff inflation.
BTC just printed
Can you walk us through what that
$1,000.
looked like over the last couple of months, if there were
When?
specifics from the January meeting to now that helped you
And it's
make
still
those
going.
distinctions?
So when we say separating the signal from the noise,
So let the
that's
speech-
just a
let
way
the
of
speech
saying that
continue,
things are
guys.
highly uncertain.
Do not
and
stop
that,
the speech.
You know, you're reading
Let
about
the speech
developments.
continue for the
news is
moment.
full of developments of tariffs.
Thank
being
you,
put in
guys.
and taken
It's a
off
good
and things
number,
like
right?
that.
It's a good number out here.
Some of that is noise in the sense that it's
Obviously,
not
could have been
really
better.
telling you anything. You're trying to
Obviously,
extract a
without
signal from
that loss from the
and
beginning,
signal is
which is
what's
absolutely
gonna
not
be the
needed
effect
to have
on
the
economic
motivation I was
activity, on
joking about.
inflation, on employment, and all those things. So
Maybe not.
So that's really when we say signal.
Well, a
noise. So the
2,000,
second thing was
actually a $1,500 day at
Similarly
that
for
time.
tariff inflation, non-tariff inflation, ways that you're making the distinction.
We would have been
a special case of that. You know, with the idea being
around 7,300
and
right now.
I do think that the first 2 months
And
of this
we
year
would
are
have
a
needed
great
about
example. You've got
$300
high readings for goods inflation after
extra
a string
tomorrow.
of,
And then
readings that
Friday,
average
we would
close
have
to
requested
zero.
a payout.
And you have to ask, it's coming during tariffs, but you know,
And then
you
during
can't-
the
it's very
weekend,
hard to actually
we would have to spend the
scientifically
money.
go back and
So it's
match
better
up those
we're
increases
not
and say,
requesting the
yes,
payout, guys.
I can prove that that's
And
from
we cannot
tariffs,
spend
but
that money
It kind of has to be to some extent.
that quickly.
Plus noise. There can be idiosyncratic readings in various categories.
We got to get
which will
paid
surely
during the
reverse,
business
and
days
that
when we
happens too,
work
that
and we
could
don't
be
have time to
a big
spend the
piece of
money.
it. You know, I think we'll
That's
know
when
in
we
a couple
gotta
of
get
months
paid.
We'll know whether those were, you know, where
Look
that
at this,
really was
fellas.
from. But that's
86
another
grand
case
from the
where I think
BTC
it's
becomes
going to be very, very
unstoppable.
challenging to
And then along with
unpack
Bitcoin, other
the
cryptocurrencies
inflation
are
that we
going to
see
the
over the
moon
course
as
of this
usually.
year and be
Gold
able to
is
say with
wild.
confidence how much of that came
S&P
from
500
inflation and how
becomes
much of it-
unstoppable
sorry,
in
from
the next
tariffs
days,
and how much
breaking
of it
above the
didn't.
700s.
But that's what we'll be doing.
It
We'll
has
be
a
doing that,
gap
and so will everybody else, and we'll all
to
be
deal with, guys,
trying
over
very
here.
hard to make that assessment. And you know, I'm sure we will.
We are making
make a
the
lot of progress
assessment.
on that, and we already have.
We got to
but
fill up
it's-
that
it's gonna be a
gap, and
challenge.
as soon as we
Do you have
start
a sense
gaining
yet
liquidity,
as to what, in your mind,
it's
would
gonna
make something
fly.
cross from noise to a signal, what that threshold would look like?
You know, it would depend on what we're talking about.
Post-market
I mean,
session. It's a very good
obviously,
post-market
you're looking for
session
direct
indeed.
evidence that particular pieces
Indeed.
of inflation are or are clearly not caused by tariffs. For
It has been a
example,
good
if it's something
session
that
throughout
was,
the entire week.
You know, in the service
Usually
sector that
they
was
say
far away
trading
from
during
anything that's tariffed, you might think,
Federal
okay, well,
Reserve
that
rate
is,
announcement is
like, frankly,
difficult,
housing services
and you saw
inflation,
that today how difficult it
which-
is.
which, by the way, has
Plus,
been
during the
behaving well.
speech, they say
You know,
it's
which
also very
for some
difficult,
time was
and you also saw that,
kind of our
guys.
problem. Now it's slow, but it's definitely, you know,
No, we're
moving
just
down
joking,
in,
of
in
course.
a very good way.
So
It's more now with goods and to some extent
markets
with,
were grinding.
with non-housing services inflation.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS
breaks
News.
out at 86.
So consumer
Let me share with you
sentiment
what's
has
happening
dipped
here for the
dramatically, but
one-day
you say
candles.
The economy
Breaks
and
out
the
at
hard
86,
data
has
is
the
still
Thursday,
solid.
Friday
What is your message
bullish,
to
and
consumers
then
that clearly
during the weekend
disagree
bullish
and
as well. And the
don't feel
BTC, the
that
crypto
strength?
market,
Because
is
the
going to
hard
get
data
back
they're
into
looking
the
at is their grocery bill.
$90,000
Okay, so
range.
a couple things. The grocery bill is about past inflation, really.
With
There was
Nasdaq,
inflation in
look at the
21,
beautiful
2, and 3,
engulfing
and
about it is
prices went
printed
up.
here,
The current
and the
level
V-shaped
it's not
recovery.
the change in prices. It's they're unhappy and they're not wrong to be
That
unhappy.
we are
prices
dreaming
went up
about.
quite a bit, and they're paying a lot for those things. So that's, I think that is the
DXI,
fundamental fact, and has been
DXI
for
had a
long
good
time,
starting of
couple
the day,
years,
and now
why
it's
people are
losing.
unhappy with the
Losing on the numbers,
economy.
breaking
It's not
below
that
this
the
whole
economy's not
structure here on
growing,
the
it's not that
DXI would be
inflation's
lovely,
really high,
getting
it's
back
not
to
that
100s.
unemployment is high. It's none of
That is
those
going to
things.
help the crypto
We have,
market
you know,
tremendously, which is
4.1%
something that I am
unemployment.
deeply
We've got
into.
2% growth, and you know it's a pretty good economy, but people are unhappy.
Good
because
stuff,
of the
guys.
price
well,
level.
that's pretty
And
much
I do
all about
completely
today's
understand and
two
accept that.
sessions. Sufficient,
And just to
right?
follow up, why
Max
are
profit
you
is
still
always sufficient.
projecting
1,527,
if your own
1,551,
projections show inflation
1,525.
higher for
These are the
longer?
three accounts.
Does that mean you see a slowdown in economic growth as a real threat?
So I think if you
Looking forward,
remember we came into this
at
with,
least for a
at
decent
the December
continuation
meeting,
for Thursday,
the median
Friday.
was 2
Make sure to
cuts.
subscribe, like the video,
median was.
and we talk to you
So you
tomorrow,
come in
guys.
and you
We
see,
are going to
broadly
start
speaking,
the next live
weaker
stream
growth, but higher
before the
inflation.
U.S. market opens in
And they
30
kind of
minutes,
balance each
as
other out.
usually. Hopefully that's going to be the schedule.
And unemployment is really, they're really
Thank
only,
you guys
only
for
a
watching.
1/10 change. So there's just not a big change
Appreciate
in
it.
the forecast. There really isn't. Modest, you know.
We're going to
meaningfully
organize
higher,
some giveaways very soon.
Growth and
Preparing,
meaningfully higher
working on the
inflation,
website.
which call for different responses, right? So
And preparing
they
any
cancel each other
educational
out, and people
material
said, okay,
about
I'm gonna stay
anything
here.
that is
But the second
important
factor
for
is
you guys
it's so highly
to
uncertain
clearly understand
is
and be
just,
aware
you know,
of.
we're sitting here thinking, and we
This is where we
obviously
are
in-
and how
in
it goes,
touch
guys.
with businesses and households.
Thank you
all
so
over
much
the
once
country.
again
We
for
have
watching, guys. Looking
an
forward to it
extraordinary network
tomorrow.
of
Have a good
contacts that come in
afternoon. Have a good
through
night,
Reserve
everyone.
banks and
We'll
put
talk
into
to you soon.
Facebook and also through